Hi, thanks so much for joining in. If you're an investor in India's mutual funds, then you have bought into the Indian growth story, the long-term growth story of this country. And that is evident in the flows in the recent past, because at a time of global uncertainty, when foreign investors have been fleeing our shores, the flows into domestic mutual funds has been very strong. In fact, especially through the SIP route on a gross basis, we've been seeing all-time highs practically every month. And even the overall flows, particularly into equity mutual funds, have been very strong. But based on the kind of corrections that you've seen in the Indian equity markets over the past few weeks, if you've got certain questions, that's perfectly understandable. In fact, the stage is set for what is a very important statement on the finances of the country by the finance minister on the 1st of February in the union budget. And that will set the stage for the new financial year as well. What you need now as an Indian investor and one in mutual funds is perspective. And to give you that, I have with me Mr. Nilesh Shah, who is the managing director at Kotak Mahindra Asset Management Company. Nilesh, thank you so much for taking the time. Always a pleasure speaking with you. Let me start by asking you to give me your understanding of the context we are in right now, both from a global standpoint, because that is heightened uncertainty, and a domestic standpoint where there are certain expectations that are being built heading into the budget.
From a market point of view, they are expecting Triveni Sangam in the budget. One, maintain the path of fiscal prudence. Honorable Finance Minister guided 4.5% fiscal deficit for FY26 while presenting the budget. That must be honored. Second, the private capex is low and urban consumption is subdued. Both of them require some sort of fiscal push or support. The government this year announced budget spending of about 11,111 crore on the capex. One, please ensure that the target is achieved and ensure that in next year we spend similar or more kind of money on capex. Urban consumption can be supported either through subvention and EMI so that leveraged consumers can get benefit, or through some tax concession at the bottom end of the middle class. Finally, if you are going to spend money and maintain path of fiscal prudence, you need to raise resources. Now, as Chanakya mentioned, taxes should be collected as bee collects honey from the flower. The salaried class and people who are already in the tax net are probably taxed at a much higher rate. Time is to look for improving compliance so that people who are outside of tax net starts paying fair share of tax. Unfortunately, in India, we still have people who believe that if they pay taxes, it will go to Queen Victoria. They need to remember that we got independence on 15th August 1947. If we can do this Triveni Sangam of fiscal prudence, capex spending and urban consumption boost, and raising resources through better compliance, I think this budget will go a long way in supporting India's growth.
Okay, let's delve a little deeper into some of these issues that you have highlighted. Nilesh bhai, when it comes to the budget, the expectation is that there are certain levers available by the finance minister. You have pointed that out as well. But if I talk about capex and if I talk about infrastructure spend in particular, then because this was an election year, the velocity of the spending may not have been to the extent that was desired both by the market as well as by the government themselves. So maybe we will see a print that is not absolutely ideal. In your estimation, when that starts firing on all cylinders in the next financial year, will there be a surprise on the growth front?
So, Alex, I don't accept that because there was election in April, May, June, July, the whole year's capex target could be missed. we can always catch up in next remaining 8 or 9 months for what we didn't do in first 3 or 4 months. Number two, we have seen China building an hospital in Wuhan in 7 days. That is how our neighbor is moving on building infrastructure. Now, being autocracy, they can do a lot of things which we as a democracy can't do. But still, we can definitely improve our execution speed, our project management skill, and ensure that capex target is achieved. If the capex target is achieved in advance, the multiplier effect of the same continues in the years to come. The more we delay, the multiplier effect is also delayed. So if we can front load capex, undoubtedly growth next year could surprise us.
Okay. Within this infrastructure spend, if you were to look at the areas where the government is spending and can spend in the new year, if you were to anticipate what could be announced, where in your opinion will the thrust of the government be?
So the thrust of the government has changed over the years from road to railway to water. Renewable energy has remained flavor of the season all throughout. My feeling is that the focus of the government will continue to remain on affordable housing on one side, renewable energy to tackle climate changes on the other side, and water related stuff, because that's the work which has already begun, but we need some more momentum to reach to the destination. The road and railway major capex is done. There will be obviously some incremental capex, but the focus will be affordable housing, renewable energy, and water.
Okay. And from that perspective then, the avenues to invest are pretty much the same as they have been. But a follow-up on that, on the infrastructure side, we are speaking at a time when our neighbors and also in the West, you have the United States and companies there that are making major strides in artificial intelligence and computing. Do you think that the government will take cognizance of this, especially at a time when seemingly, and we are yet to absolutely prove this, Nilesh Bhai, without a shadow of a doubt, the creation of this deep seek with limited resources is what is being touted. Why not allow for the creation of something similar in India?
So while I'm not an expert on technology side, please do remember that Chinese accounting is magic. A lot of things could be free there by government and won't be counted in the budget.
Fair point.
But anyway, we should not bother about that. We should bother about the product they have created. And clearly, Indian entrepreneurs have the talent to do what Chinese have done. We need to support our entrepreneurs. Alex Bhai, I will share something which I couldn't find it on Google search also. This I heard at one of the lecture by one of the professor in IIT. He talked about 7 kids in a North India engineering college in tier 2, tier 3 town who created a prototype of a rocket engine with 4,500 Newton thrust area. They did it with 60 lakh rupee while studying their engineering. Now the commercial rocket engine will have 25,000 Newton thrust. When these kids become engineer, and when instead of 60 lakh, they'll be able to raise 6 crore, who knows, they will make prototype of rocket engine at 25,000 Newton. I don't think so. We have worries about talent. Our challenge is that we treat our talent in a manner like Abhimanyu was treated. In Mahabharata, Abhimanyu went on his own choice to the Chakravyuh. In India, entrepreneur is born within the Chakravyuh. Abhimanyu was only fighting Kaurav and was hoping that my uncles and brothers will come to help me. In India, many a times entrepreneur fights Kaurav and Pandav together. The compliance burden, the rules and regulation burden restricts our entrepreneurship. If we can free our entrepreneurship, I think we will be able to catch up with many of the leaders in many of the things.
Okay. When it comes to consumption, and this is another big driver of growth for the economy, I think the voices this time around, Nilesh Bhai, are stronger than they have been in past years, that a break is needed, that for individuals to spend more, they need to have more in their bank accounts. And so to that extent, you also alluded to it, widen the tax net and give more money to the people, or let them have more money. And that itself will be a significant growth engine for the Indian economy. But how much room is there from the perspective of the government?
So, assuming that we will be able to raise resources, there is enough room. Now, that's a naive statement, but I have some data whereby government can think of raising resources. For example, one, the divestment could be substantially higher than what is being targeted in last couple of years. Markets have corrected, but despite that, I believe a 200,000 crore divestment target is possible in next year. We have also seen many Indians moving abroad from quality of life or opportunity point of view. In many of the Western worlds like US and Europe, they levy exit tax when their citizens renounce their citizenship. Why not we levy exit tax on people who are leaving India to settle abroad? The third thing is gold monetization scheme. We all know there is a lot of unaccounted gold in parallel economy, in tijori, in safe deposit locker. This frozen saving does not benefit India. Gold prices have moved up. It is time to think out of box and come out with a scheme which can defreeze this savings and tijori ke sone ko economy mein laake rakhe. Government will get taxes, investors will get the capital, and the growth will be supported. So one can raise resources through divestment, exit tax, gold monetization scheme. The other way to raise resources will be tax compliance. Salaried employees carry disproportionate weight of taxation on them because for them tax is deducted at sources. But many of the non-salaried people are not paying fair share of tax. This is visible in spending, where more number of people are buying luxurious cars than they are filing income tax return for similar income. So by improving tax compliance also, we will be able to raise resources. Once we are secured on the resources side, we need to figure out how to provide immediate boost to urban consumption. But that should not be a longer term solution. Our longer term solution should be to ensure that Indian consumers' money is spent in India. Today, 1.3 million Indian kids study abroad. Imagine the amount of money we are sending abroad. Why can't we ensure that there are more Flame University, ISB, Ashoka, so that Indians can study in India and spend those money here? Many Indians are traveling abroad. Last number was about 15 million plus.
Yes.
Can we encourage domestic tourism? So similarly, we'll have to ensure that India's spending on education, travel, remittance, etc. is spent in India rather than abroad.
Okay, the last leg of this conversation, I want to focus on the opportunity for the Indian investor, particularly in the context that we are in. And also, Nilesh Bhai, some of the behavior that we saw over the course of 2024, which is that a lot of money went into sectoral thematic, a lot of money went into small cap funds and the broader end funds, and those maybe, and some of those concentrated portfolios are seeing significant drawdowns. And so even that can have the opposite reaction, where people maybe take knee-jerk reaction, they're seeing significant drawdowns in their portfolio. From your perspective, at the current juncture, also taking into account the prospects for gold, the opportunities in fixed income at a time when the interest rates might be heading lower, what is the kind of allocation that you think is appropriate?
So, Alex, we have been always advocating asset allocation to our investors. Yesterday also we advocated the same. Today also we are saying the same, and tomorrow also we are going to say the same. Our view is that interest rates will be cut. RBI yesterday increased liquidity through Triveni Sangam of open market operation, repo, and buy-sell swap. That sets the stage for interest rates to come down. So in fixed income, go for duration. Gold, we remain bullish as there is competition between Indian housewives and central banks around the world who will buy the maximum gold. And I believe now central banks have converted to Indian housewives, whereby once they buy gold, they don't sell. Gold should get supported by central bank buying. On equity side, our view is that this is fair value market. With correction, it has become little fairer, and hence this is time to be neutral weight to equity with some bias towards large cap. Now, many investors and distributors haven't raised, the correction issue in recent times, but there are commentary outside. People who are not mutual fund investors are jumping far more about how investors have lost money. I just did a quick calculation, Alex, by Kotak Emerging Equities, our mid-cap fund. 5-year return of that is about 24%, and 1-year return is 21%. This is when the world is crying that mid-caps and small caps have corrected massively. You are getting 24% return compounded for last 5 years. What more does one want? So people will have to ignore correction because you have made massive wealth in last 4-5 years. Be happy with that return. Markets will go up and down. It is your asset allocation which will deliver return to you.
Nilesh bhai, now not necessarily a very serious answer from you. Assume that your birthday is on the 1st of February and the finance minister has to give you a birthday present. What would that be?
Just like last year, please present a budget which is growth oriented by pursuing the path of fiscal prudence, by raising resources through out of box idea, and by giving boost to infrastructure investment as well as consumption. There won't be a better birthday gift for me or Indians than that.
Fantastic. Thank you so much, Nilesh, for joining in, for speaking to us on NDTV Profit. So what does the mutual fund industry seek from the finance minister in Budget 2025? Why not ask Chief Executive Officer of the Association of Mutual Funds in India, Venkat Chalsani. Venkat, thanks so much for taking the time for speaking to NDTV Profit. There are several proposals that have already gone through from the industry, but in your opinion, what is the most important one?
Thanks, Alex, for having me on this particular show. As always, we have submitted our recommendations to the Ministry of Finance for this particular budget. But the most important thing, since you wanted me to express about one point, is on the fixed income, that is on the debt mutual funds. We had, at one point of time, if you look back into the history, way back in 2018 onwards, there was an equal distribution between the debt funds and the equity funds. But as we speak now, the equity mutual fund portfolio has gone up substantially, but debt mutual fund from 2018 onwards remained almost stagnant. The country, as we all know, need a lot of infrastructure funding, and the most important piece happens to be the debt markets. And for that, we have sought various concessions from the government of India. The first and foremost of it being the withdrawal, the indexation benefit, which was introduced earlier and withdrawn during the July 2024 budget with retrospective effect. That is the first ask. We said that kindly restore this indexation benefit. If you look at the way in which the returns are there coming in the fixed income part. It's almost around 7 to 8% is the return that we get. If you adjust toward with the inflation, the returns will be almost around 1 or 2%. And therefore, our request to the government of India is to restore the indexation benefits which have been withdrawn in July 2024. And there was another thing that has happened in July 2024 was that they have done it with a retrospective effect. Even that also we are requesting for the restoration.
Okay.
Yeah.
Please go ahead. You were making a point.
Our focus, as I said, since it is going to be on the debt funds, the second thing that we are also looking at is we want to bring it, while there is a comparison which is being made in the market, we're talking about the comparing the fixed income with the deposits and say that we want to keep it on par. I do agree with that. But what we want the fixed income mutual fund is to be compared with the listed securities, the debt debentures. In the listed debenture space again, the capital gains tax, the long-term capital gains tax relaxations are there, and we are asking that the mutual fund industry also should get the similar benefits as is given for the listed debentures.
Okay. Just to drive home the point, Venkat, just to drive home the point, you've seen quite a dramatic shift in the flows over the course of, since that change was made in the taxation treatment of fixed income mutual fund schemes. Retail investors are not gravitating as they used to fixed income mutual fund schemes. Instead, they're going towards the hybrid schemes where they're getting some semblance of an exposure to fixed income and some to equity. Is that something that you witnessed in the industry?
Absolutely, absolutely. I mean, that you are driving the point. Basically, people are looking to get the benefit of the taxation. At the same time, they want to have the advantage of the fixed income character. And therefore, you are seeing that there is more into hybrid schemes.
Okay.
But just to add supplements, these requests that I've made on the fixed income, because what we have done in this particular point is we try to ask various things on the fixed income piece. The another ask that we have made is to bring out, I mean, have the if the investments are being made into infrastructure, like the way the long-term capital gains tax has been is exempted in respect of the tax bonds which are issued by NHA and others. We said that when we invest into that, the benefit should be passed on to the investors. Again, that is another request that we have made. And to further improve the debt markets, we have also asked that similar to ELSS, we also should bring the debt-linked savings scheme. So we have made 4 asks in this: reduce the capital gains tax, bring the indexation back, introduce a new the product like DLSS is similar to ELSS. At the same time, give the tax benefits when I'm investing into infrastructure where you can have a lock-in period. So the focus during this particular recommendations that we have made is to see to it that more and more people in retailization or financialization happens in the fixed income space as well, and more retail investors come into the space.
Fantastic. And I think you've encapsulated that very well, Venkat. Of course, there are a total of 15 proposals that have gone through, and we have covered them to a certain extent on the platform as well. But thank you so much for elucidating what the primary thrust or the primary focus is, and it would benefit a lot of investors. Thank you so much for joining me on this program, and pleasure having you.
Thanks, Alex. Thanks for having me on the program.
All right. We've spoken about the context ahead of Budget 2025 from your perspective, the individual mutual fund investor, and also from the perspective of the mutual fund industry. For you as an investor, you have enough perspective now to approach that event and indeed the new financial year with a lot more confidence. We've got lots lined up over the course of the week, of course, and also live coverage of Budget 2025 right here on NDTV Profit. So do stay tuned.